Baik, selamat malam Bapak-Bapak dan Ibu-Ibu sekalian. Selamat datang di webinar PT Phillip Futures pada malam hari ini. Webinar pada malam hari ini bisa kita katakan merupakan webinar yang cukup spesial karena pada malam hari ini kita kedatangan pembicara tamu dari Singapura yaitu Mr. Wong yang akan membawakan materi Technical Analysis for Gold atau Technical Analysis on Gold. Baiklah, sebelum saya memperkenalkan Mr. Wong sebagai pembicara utama kita pada malam hari ini, perkenalkan saya untuk memperkenalkan Phillip Futures dan PhillipCapital. Baik, sebelumnya untuk outline webinar akan terbagi menjadi 3 sesi. Sesi pertama yaitu pengenalan PhillipCapital dan Phillip Futures. Kemudian sesi kedua yaitu pemaparan materi oleh Mr. Wong. Kemudian sesi ketiga merupakan sesi tanya jawab. Mungkin saya bisa jelaskan sedikit mengenai sesi tanya jawab di sini. Bapak dan Ibu sebagai peserta dapat menanyakan atau bisa bertanya melalui fasilitas chat yang ada di GoToWebinar. Kemudian nanti akan kita bacakan pertanyaan-pertanyaan Bapak Ibu pada sesi terakhir dan akan dijawab oleh Mr. Wong. Baik, saya mulai dengan PhillipCapital. PhillipCapital merupakan perusahaan layanan finansial yang didirikan pada tahun 1975. Kini PhillipCapital telah tersebar di 15 negara dengan headquarter-nya yang berada di Singapura. 15 negara itu adalah Kamboja, Malaysia, Thailand, Vietnam, China, Hong Kong, Jepang, Australia, India, Turki, United Arab, kemudian ada UK dan juga Prancis dan juga USA. Kemudian untuk Phillip Futures sendiri, mungkin di antara Bapak dan Ibu sudah sering mengikuti webinar dari Phillip Futures, jadi mungkin sudah cukup mengerti, cukup kenal dengan Phillip Futures. Phillip Futures sebagai member dari PhillipCapital, Phillip Futures merupakan sebuah perusahaan pialang perdagangan berjangka yang berada di Indonesia. Phillip Futures telah tergabung sebagai anggota kliring Indonesia Komoditi Derivatif Exchange atau ICDX dan Jakarta Futures Exhange atau JFX untuk ikut serta dalam mengembangkan perdagangan komoditas Indonesia. Phillip Futures juga terdaftar di BAPPEBTI, Badan Pengawas Perdagangan Berjangka Komoditi, dan izin penyaluran amanat luar negeri atau pasar berjangka asing. Misi Phillip Futures adalah membantu nasabah untuk mencapai kesuksesan finansial di pasar komoditas dan derivatif. Oke, itu aja sekilas mengenai PhillipCapital dan juga Phillip Futures. Kemudian sekarang saya mungkin akan memperkenalkan Mr. Wong. Hello, good evening, Mr. Wong.
Yeah, Nanda.
Yeah, okay. Mr. Wong, let me introduce you to our audience. Oke, Mr. Wong ini sudah lebih dari 25 tahun ya, lebih dari 25 tahun experience-nya dalam trading dan juga dalam industri keuangan. Ya. Beliau mengkhususkan diri dalam studi perilaku keuangan atau psikologi pasar, dan dia juga adalah seorang strategi investasi. Dan yang paling penting, dia juga adalah merupakan seorang ahli dalam manajemen resiko. Oke. CME, Chicago Mercantile Exchange dan juga SGX itu melibatkan Mr. Wong dalam pengembangan materi-materi training yang dilakukan oleh CME dan juga SGX. Jadi pembicara kita ini bukan main-main malam ini, cukup berkompeten dan juga akan memberikan materi-materi yang akan cukup berguna bagi para peserta pada malam hari ini. Oke, untuk mempersingkat waktu, mungkin kita bisa langsung ke Wong untuk membawakan materi pertamanya. Jangan lupa apabila ada yang ingin ditanyakan dari Bapak dan Ibu, silakan menanyakannya di kolom atau fasilitas chat yang ada di GoToWebinar ini. Oke, Mr. Wong, you can start the material for the webinar tonight.
Okay, let me just get to my slide. Okay, Nanda, if you can see my first slide, just want to confirm that.
Wait a minute.
Okay.
I have to change the presenter. Okay, Mr. Wong, maybe you can try to.
Okay, you should be able to see the first slide right now.
Yes, I can see.
Okay.
Bapak dan Ibu bisa melihat slide yang di share oleh Mr. Wong Kon Hao.
Yeah. Okay. Thank you, Nanda, for the
Okay.
wonderful introduction. And I also want to thank you, Tom, for having us, myself and CME, and as well as Sheila for facilitating this, making this possible tonight. So also I want to thank you, our sponsor, CME Group, Chicago Mercantile Exchange, Ms. Rachel Wong, for sponsor this event for me to be here tonight to talk about the technical analysis on gold. I think tonight I just want to go beyond just technical analysis on gold. I also want to talk about the market psychology on gold as well. So at the end of this 1.5 hour presentation with Q&A, I hope they will give you a clarity on exactly where the gold direction will be. I think a lot of us know that gold, there's a lot of future potential upside, but how much more can they go? So we're going to discuss about that. And as well as I'm going to talk about how to trade in the gold as well. Okay, let me just very quickly go to, I do not think I want to go through this introduction. I'm just very thankful my journey of the last 25 years in the market that I first started in the floor trading as a floor trader. And I think that journey was so wonderful that it allows me to study into the market psychology of the price behavior. And today, my forte, my expertise is in to study the forensic, doing the forensic study of the price movement. And I believe that during the introduction earlier as well, someone I forgot to thank tonight is Phillip Futures Indonesia itself and Phillip Futures as a group itself, that I believe, my personal opinion, I believe that Phillip Futures, it is, or PhillipCapital, it is the largest broker in Asia. That's what, according to what I know, okay? But PhillipCapital has been always a very humble broker that I also know personally as well. All right, let me just move on to the disclaimer. What I'm going to share with you, a lot of information, but not much time we have, but at the end of it, like what I say, it's going to bring forth great clarity on the direction of the precious metal market. Now, so whatever I'm going to present to you is based on my personal experience, my personal conviction. Of course, when I say personal conviction, means that what I know, I will do it on my end, but it's for my own personal consumption. But say, for example, you're influenced by it, you find that it's really meaningful what I've shared tonight, and say tomorrow or next week, you're going to take action according to what I presented, you have to understand that it is all by your own, you have to take your own responsibility. I do not represent the organizer. In this case, it's Phillip Futures, nor CME Group itself. Okay, so all these are my personal conviction, and it is for my personal consumption as well. And I hope that my sharing will be able to bless you tremendously as well. Now, so this is what we're going to go through tonight. Quite a bit of, quite handful of stuff. I'm keeping my thumb check because at about 1 hour from now, we're going to go to Q&A, and I look forward to all your questions. So what you can do right now is that as I present to you my case about the precious metal, if you find that you have some ideas, some question that you do not quite understand about the gold market, about trading, please feel free to, you can start asking your questions. And with me, which is in Indonesia, I'm here in Singapore, Chilia is going to consolidate question, and I'll try my best to answer all the questions if I can by tonight. So I just want to give you a highlight of what I'll be covering tonight. So I'm going to share with you how to exactly identify the difference between retracement and reversal. And this is very important. Whether it's an uptrend or downtrend, we need to acquire skill to identify what is retracement and what is reversal. It's not just for the traders, but it's also for the investor as well. Then after that, we are good to go, and I will give you a test that based on the current market on the precious metal, but we'll touch on gold, and at the end, I'll touch on the silver market as well. We're going to go through the slides, the chart, and I'm going to ask you what's the current trend and how to identify between retracement and reversal. Then after that, I think you know my conviction that I think most of us are seeing that gold is going up. Yes, I strongly believe that gold is going up, but I'm not just going to give you the technical, the charting reason but I'm going to back up with some fundamental understanding as well. So when two combined together, it became a very powerful analytical tool. And I hope that that will also give you some idea how you trade. Being a trader, I will have to also look at the fundamental development as well. Then towards the end, I will share with you some very simple trading strategy for precious metal market. And I hope to receive a lot of your wonderful questions on the gold or silver and the precious metal market. Okay, well, good to go. And just allow me to share the next 5 slides. I just want to thank our sponsor, CME Group, for sponsoring me to speak in this place. And I think the last time that I was in Indonesia, it was just right before the COVID-19, where the world have the lockdown, just right before. And it's been more than a year plus, a few months. And I'm so excited that I just told my wife that I'm going to speak to my friends from Indonesia. Okay, so 2 years ago, CME, I'm so glad they launched this product. They launched the micro E-mini index futures. Now, as all these index, US index start to escalate and start to appreciate, it became very expensive to take ownership of all these contracts. But I'm glad that the exchange, CME Group, they have the foresight to launch this micro mini futures, index futures, US index futures 2 years ago. And you could see that that was 2 years ago from the beginning in May 2019. And over the years, the market, the volume have grown tremendously. And I believe that 740 million is a record contract, not just the micro mini contract itself, but the whole entire product. I do not know because I do not work in CME, but I believe that because I used to trade the mini S&P as well, but I never seen this kind of volume before. So I believe that this is one of the record-breaking contract. So now the different colors just represent the different contracts from S&P, NASDAQ, Russell, and mini Dow Jones. So volume as a trader is very important because whenever there's volume, it means that there are interest in that particular market. And interest is important because it is real. And then later on, we're going to study into the fear and the greed of the market. So volume is of great essence. So whenever the price move, I don't just look at the prices, but I also have to study into the volume as well, because volume, it is the real thing, is the actual transaction itself. Now, the next slide, I just want to also represent to you that in a time of uncertainty, yes, I know that US market, stock market has been going up, but it is also, you have to recognize that we recognize that in this time, all over the world is still very uncertain because of two things. One is the inflation pressure that the whole world is facing, and the other one is the COVID-19 that the whole world is also experiencing right now. Now, so these are uncertainty, but you can see that since January, February last year, it was the time when China flew over to US, the COVID-19 hit the US, the market became even more uncertain. But look at the volume from February 2020, the volume increased. So what does it mean to you and to myself as well? Is it means that whenever the market is uncertain, even more, that there's a need for such a derivative contract, not just to participate in trading opportunity, but also for hedging purposes as well. So you can see that the volume increased specifically in February 2020. Okay, this is something that I think we, Asia should be very proud of. Now, this was last quarter performance. So basically, it just represents that throughout all these micro E-mini futures, the index futures, and who are the participants? Of course, the North Americans traders are the main part, but not forgetting the Asia Pacific. It started, I remember that at the beginning in 2 years ago, in May 2019, it was just about 5% market share or less. But last quarter, it was about 9.45%. And on my right, I just received the latest information that for Asia Pacific traders, trading the micro E-mini index, US index futures have grown. That means we, in this part of the world, is capturing about 10% of the market share. So I hope that will inspire you that if you have not been trading the micro E-mini US index, you should take a look at. It's not just for trading opportunity, it is also for hedging purposes as well. Now, what do I mean by hedging? It means that when the market moves down, there's an opportunity to also sell short first, then buy back later. where you continue to hold on to your stock position. That's called hedging. So because of the very successful launch of the micro E-mini index, US index futures, that was August last year, August 2020, CME also launched the option, the micro E-mini options market, and it was also very successful. The orange represent the volume of the options, and the blue represent the outright E-mini micro index futures. So it was also very successful as well. For those that are interested to find out between the two, between the micro E-mini index US futures and options, of course, you can always call your broker, who is Phillip Futures. Okay, last one slide, and then from there, I will just proceed on to my topic tonight, which is also very important. And now, what is hot over the last 1 year? That means from last year to this year, what is the incremental of volume? That you can see that the average daily volume. Again, earlier I say that volume to me as a trader is very important because I do not just look at prices, but prices without volume is meaningless to me. You just pure speculation. But I want mass participant, therefore volume is important. So what has been growing in interest over the last 1 year, year on year? You can see that the 3 months SOFR is stand for the interest rate. And interest rate is a very hot topic. But next one is the micro futures, micro silver futures. It has went up a lot, in terms of the interest. And the micro E-mini Russell, these measure the small cap stock, the small capitalization stocks in the United States. And of course, all the micro futures. And tonight I'm going to talk about the micro E-mini gold and silver. Okay, this is another representation. And once again, I want to thank you, CME, for inviting me to speak in this space, especially to my friends in Indonesia. It's been more than a year that the last time that I spoke in Indonesia live in actual person, but because of COVID-19, I think it's not a bad thing. It just brought the whole world closer together, that I'm doing more webinar than before, but crossing overseas at the comfort of my home. I kind of enjoy it. All right, let me just go straight to the topic tonight before I run out of time. So, now, let's discuss about the difference between retracement and reversal. What is the difference between retracement and reversal? It is important for traders. It is also important for investors as well. Now, so how to identify the between market reversal and retracement? Now, do you consider this a retracement or a reversal? How about this? Is it a retracement or a reversal? Yes, I'm going to talk about gold later, but I just want to build some foundation here tonight between the understanding between reversal and retracement. And how about all these? Yeah, but I can tell that it's important to know what is reversal and what is a retracement, so that we will not just know how to get in, but we also know how to hold our position dearly to it, if you have a long-term view or short-term view. Okay, let me just give you the answer right now. How to identify between market reversal and retracement. Now, we have to understand that market reversal comes, in this case, in a bull market that we're expecting, that market reversal come after a bear market. That means when you discern that the bear market is done and the trough, market trough or market bottom have been set, and based on your study, you realize that there's an opportunity that reversal may come and it may enter into a bull trend that's called reversal. Let me just repeat. It must come after a bear market. It reached the bottom, and you, based on your study, your analytical study, whether it's with fundamental or technical or both together, you must make that study yourself. And you must draw a conclusion that maybe the bottom have been met, and moving forward, it should be a bull market. Then that's called reversal. Okay. Now, when the reversal is set, it means that you're identifying right now it is a bull market. That means the bull are on the run. It is a bull market. The bear is over, reversal done, and now you're on the bull market. Now, then any short-term down move, this is what I call retracement. It's important. Again, let me just repeat. Once you identify the reversal on the bear market is done. Moving forward is a bull trend. And once the bull trend has been set, now being a trader investor, what we should be looking out for is this. When the bull trend is set, you have identified that this trend, current trend is a bull trend. What you should do is that look for retracement to come. Whenever you see, say for example, a hammer. So later on, I'm going to introduce you to a program. It's free. I've done it with CME as well about 2 years ago. It was very well received, how to identify those hammer that has high weighting, that when retracement come and if hammer appear, then this will be a proposition for us to get in. Let's say, for example, you miss that, then you wait for the next retracement. So try not to chase after the market. Wait for a retracement to come, hammer appear, those with high weighting, then we get into the market. And you should be quite good because you're on the right way. This is what I call between reversal and retracement. And this is also a reversal, but it's a very micro reversal. It's more like a retracement to get into the market. All right, so we are done with the first part. Let me just move on to the second part right now. Now, identifying the current trend and retracement for the current gold market. Now, I want to take a moment to study into this month chart for the gold market. If you notice that it was a long-term chart or super long-term chart since 1990, and that was, I entered the market in 1995. I was a floor trader in 1995. So in 2000, I'm still a young man. I was 20, oh dear, I was 30 years old in year 2000. That's the year that I got married, okay? So after I worked for 5 years, I got married. And now, and this is, I prepared this on the 14th of May. And today I just have to update it on the 21st of May from 1826. Today the price is 1874. Now, I'm asking you a question right now, but you don't have to reply me. Just take a moment to think for a while. What is the current trend for the gold? If you look at the monthly chart, basically you're looking at the long-term trend. What is the current trend for the gold? Is it an uptrend or downtrend? Now, the question number 2 and 3 will be a little bit more challenging. That can you spot for any retracement or reversal within this last 20 years? Can you spot for any retracement or reversal based on what we've just discussed on over the last 20 years? Okay. Now, you don't have to reply me. I'm going to give you the answer anyway. Now, it depends on what is your view. Is it a super long-term view, short-term view, or very short-term view? Let me just give you an understanding between a super long-term view and long-term view. Now, I do have a super long-term view for gold. When did I start investing in gold? That was in year 2008. Yeah, 2008, I was 38 years old. Yeah, so now putting into perspective, because year 2000, I got married, 30 years old, and year 2008, I started investing in gold. That was about $800 then. Later, I'll tell you a story why I started investing in gold. $800, because I have this super long-term view for gold. When I say super long-term view for gold, is that even today I'm still holding that gold that I purchased in 2008. These are assets. And super long-term view, when I view it as a super long-term view, I want to keep it as an inheritance to my children, to my descendants. Okay. But when I say long-term view, means that I have an objective. I may take profit in the far future. Now, you could see that there was trend. Okay. Now, where is the retracement? Now, since 2008, I developed a view that gold could be a super long-term uptrend. Why is it so? Because 2008, it was the Wall Street meltdown. If you still remember, 2008 was the Wall Street meltdown. And first time in history, the very first time in history, Federal became investor of US to buy the US debt, the US bonds. And that, to me, is a weakening position of the US dollars. Later, I'm going to explain to you how to understand gold fundamentally. Now, to understand gold fundamentally, you have to look at gold as a currency. In fact, when you buy gold, you're seeing that US dollars should be weakened. It's like just like a currency pair between dollar and Japanese yen. If you find that dollar yen is going up, it means that US dollars appreciating and the yen is coming off. So gold is the same thing. Gold, to me, is a currency. It's not just a precious metal, but it is also a currency. It's a pair between gold and US dollars. So when you have a view that US dollars may be going lower, then it is time to have a position in gold. And that started my view in 2008. Why? Because for the first time in history, Fed have this QE1, QE2, QE3, and recent years we have the Trump cash. All these are Fed need to invest in the treasury bonds, and there it will weaken the dollar. So then I already have a view that US dollars should be weakened over the years, over the decades, and I start to accumulate gold in 2008. Now, so my retracement for super long-term view is this. Around 2000, as I look back in history, I believe that in year 2000, the gold has reversal. This is a super long-term view. As the gold goes up, there's a retracement in a super long-term view. You have to understand that. Now, so this, to me, yes, it's a 3 years of down move, but to me, I view it as a retracement on a super long-term view. So I'm still holding my gold at $800. So when the market came down, of course, I'm feeling a little bit disappointed. Do I have control over the gold? I do not have, but I understand the fundamental that US dollars likely to be weakened over the long run. So I'm not fearful. I continue to wait upon. When retracement comes, I get in a second tranche again. In fact, it could be the third or fourth tranche. So along the way, I just keep on accumulating gold. Until this point, I accumulated even more on the gold on this super long-term view. On super long-term view, just recap, reversal, I believe it was formed in year 2000 and after. And then we have a retracement, and you have to look out for long-term investor, look out for retracement to get into market. Now, how about long-term view? Now, long-term view is, I'm taking position, but I have an objective to take profit in the far future. Compared to my super long-term view, I have no idea when to take profit, but I have one idea is to accumulate gold and leave it to my inheritance, for my inheritance. Now, for long-term view is that this, I recognize that over the last, if let's say on the perspective in the year 2015, I believe that gold has been going down, so that is a bear market. But as it picked up, now this was a bear market on the long-term view, this became reversal. Now later I'm going to share with you specifically how I spotted that reversal. Okay, for long-term view, this became reversal. Now once the reversal is done, remember just now I said, reversal is that on a bear market, when you spotted a reversal, it means that you believe that the low has been established. So therefore, moving forward, the bull trend will come. As the bull trend comes, what should you do? You should look for retracement. These are called retracement to buy into gold. Retracement to buy into gold. And these are retracement to buy into gold, because I believe reversal is done, and along the way, the bull trend has already set in. And along the way, I'm patient enough to look for dip to get into the gold market again and again and again, provided the fundamental hold and technical also align together with my fundamental understanding. So that is how I invest, and later I'm going to share with you how to trade the gold market as well. These are retracement, and these are retracement. Okay, so it's not difficult. It takes some practice. So later I will hope that you can engage in some practice continuously. Now, so did I manage to capture this 2015 October bottom? The answer is yes. When did I do that? I also wrote quite a bit of blog over the years. You can go to my company website. I published them. You can go to the QR code, and I published them on October 27, 2015. October 27, 2015, gold then was about 1,160. And I still remember I presented this gold topic in Hong Kong to a group of fund managers. And it's very interesting that in October 2015, I say that maybe it's time to invest in gold, or for the fund manager to allocate part of their resources, maybe about up to about 5 to 10% to get into the gold market. And the response was very mixed though. This class of fund managers, the younger one kind of rejected my ideas, but the older fund managers, they kind of agree to why I buy gold. Of course, I come up with a lot of proposition about gold, not just technical, but also fundamental analysis as well. Now let's go back to this. When was October 2015? It was here. This was January 2016, December, November, October is about here. And then from there, the market just dipped down a little bit more. Then the market very quickly stabilized before the bull trend set in. And then I can roll in my campaign. Remember, I got in at about $800 for fundamental reason on super long-term view. Then subsequently, as the market retraced low enough, I get into the market again. And then it became quite easy along the way over the last 4 years. As the market retraced down, I continue to accumulate for my investment portfolio. So this is how I look into gold. And shortly later, I'm going to explain to you the fundamental reason why gold is such a conviction to me to buy and hold it and leave it as an inheritance. But moving forward, I can tell that gold, there will be a lot of trading opportunity as well. Okay, I hope you can feel my excitement, okay? Now, let me just describe to you the fundamental and development in supporting all these technical views. Now, all these I explained to you earlier are technical views, but if you look deeper into it, it's also a lot of psychology, market psychology view as well. But let me just bring you to some fundamental understanding about gold. Why I say gold is a currency against the US dollars. It means that if you find that US dollars is going down, I would say that definitely gold is going up because these tools are a pair of currency. Okay. Now let's understand a little bit about the direction of the US dollars. So to understand gold, we have to understand about US dollars. What is it all about? Okay. Now, this is a very interesting slide and it's quite latest. Now, this slide, what does it represent? Not to get distracted with all the wording on this slide. Let's look at the chart itself. Now, this slide, it represents the Federal Reserve portfolio of the Treasury bonds. Now, what does it mean? It means that for the first time in history, the Federal became an investor to US to buy the US bonds. For the first time in history, I believe that in the past they bought, but they have never buy up to so sizable until the Wall Street meltdown in September 2008. That was during the Lehman crisis, the Wall Street meltdown, or you can call it Wall Street meltdown. For the first time in history, QE1 was being rolled out. And what is QE1? So basically is that the US Treasury, these are the bonds market or the debt market. So in the past, before 2008, and even today is still happening, that they created the bonds. The US in the past, before 2008, and about 2008, the number one in US bonds was China, but today it dropped to number 3 position. Then before 2008, it was number 1 rankings China, number 2 was Japan, and number 3 was UK, I believe. But today, after the QE1, QE2, QE3, it means that the Federal is an investor to invest in the US bonds. Okay. Now, then followed by the Trump Cash Act on the 27th of March 2020, it cost US about 2.2 treasury.gov in US. Fed is the owner, number 1 investor of 5.05 trillion US dollars. And Japan is 1.24 trillion US dollars. And China is ranked number 3. Now, so these charts represent the Federal position in US bonds, not Japan, China, or UK. So you could see that what do they have in position today exceed 5 trillion US dollars. It means that the more money they print, so what does it equate to US dollars? Because I need you to understand this fundamental fact. So to understand US dollars, and once you understand US dollars, you will also know the direction of the gold. Okay, it's not just to tell you a story, but we have to understand the fundamental development. So if you want to join me in my bandwagon to also have a portfolio of longevity investment, means to buy and hold it, also don't know when to take profit, but I just want to leave an inheritance for my children, unless the fundamental change. So then it's important to also understand what is the fundamental development of the gold market and the US dollars. Yes, I will go into the trading part later. Okay. Now, then it's important to also look at the US dollar today. It is important to look at the US dollars today. And this is, you could see that from 1973 all the way to the current market. And today, as of 21st of May 2021, the US dollars index is at 89 and 80 cents. Now, let's look at this very carefully. Okay, now we could see that Ronald Reagan, it was during this time where US it created a lot of money supply. What I mean by created a lot of money supply, it means that they issue a lot of US bonds and they go around the world and investor buy into their bonds, investor into the bonds, and for that, the investor will get an annual dividend of certain payout because they invest in the bonds. Now, so that was happened to them, that they issue a lot of bonds and investor buy into it. It was a very healthy arrangement, but once you start doing it, the US dollars, you could see that over the last 5 decades by now, 5 decades have weakened from a high of about 160 and today is 89, almost half the value, right? Now, when your currency or US dollars became weaker, inflation will also pick up. And now you know that why gold is an inflation hedge assets as well. Okay, so it's the trading part, it became very not too difficult once you understand the main direction of the goal. So basically what you can do is you try to do this even as a trader. I do that all the time. I try to identify where is the main trend, even as a short-term trader. Once the main trend is being established, it is up. I will try not to do both ways. Means that I will avoid selling short because the main trend is up, because I do not want my mind to go bonkers, taking opposite direction. I'll be patiently waiting for dip to come because the main trend is up. When the dip come, I'll look for those hammer that is high weighting, then I'll get into the market. Okay, there's some fundamental involved, there's some technical involved as well. Okay, so let's look at the US market. It has been a downtrend over the last almost 4 decades. But from the, I'm an expertise in behavioral science or study the market psychology. Now, I do notice something about the US dollars over the last 50 years, almost 50 years by now. Now, do you see that the US dollars has been trying to support at $80 over the last 4 to 5 decades? It will come close to about 80 here. 80 tested twice, tested 3 times, 4 times, 5 times. During the Wall Street meltdown, it broke beyond, but it being levered up very quickly again. Okay, so there's some volatility, but I could see that the Central Bank of United States trying to stabilize the US dollars, they are trying to hold it at $80. Now, this is not based on my assumption, but this is based from my observation. So when we look at the price behavior, we try to always have this notion in mind, asking yourself that what is the market trying to tell me? What is the market trying to tell me? And I could see that the central banker in the United States are trying to support the dollar at 80. They do not want it to break below 80. So definitely in the near future, if it ever visit 80 again, let's watch. I think there'll be a lot of support. But of course, if you ask me when the inflation will really come, then I would say that if it break 80 and stay below 80, if you realize that over the span of history, when it break 80, it bounce up. But if it break 80 for the longest time, it stay below 80, then I would say that likely the inflation will be a little bit overheated because once the US dollars weaken, things will become more expensive. And definitely if that happen, gold, you will see that it's going to rally even more for the gold market. Okay, so we have a understanding here is that as long as US continue to issue huge amount of loans or bonds, and there's stimulus plan after stimulus plan or QE after QE. So now from QE, now it's upgraded to stimulus. So it's the same as QE actually. So as long as there's this motion in play, so I think moving forward, unlikely the US dollar is going to go up. Now you could see that technically, market been moving in a range, and in a triangle range is getting narrower and narrower. So if you're a ardent fan of technical analysis, you also know that at 1 5 point it will break. So surely a break for technical analysis when we study into this range trading as it gets tighter. There's a bottleneck here. It will break someday, but we have to understand based on the fundamental development that we have just discussed, likely will it break on the upside or downside. But I would believe that based on the current scenario of the stimulus plan that they're having on issuing a lot of US dollars, it will weaken the strength of US dollars and likely it's going to go downtrend. So this is some understanding I'm preparing for the near or far future. Okay. Now, so let me just bring another level of understanding on the fundamental development. Then before we start to discuss about the main trend on gold, why I'm having so much conviction that the main trend is going to continuously going up. How come my heart is not waver when I bought in 2008? The market have a bear market for 4 years down to all the way to 2015. How come I'm not being shaken? Because I understand about fundamental analysis, or I understand about fundamental development. Now, so you have to understand here is that whenever there's an increase in US debt, likely, very likely, the US dollars will be weakened. Now, if the US dollars weaken, it means that in US, there will be inflation is unavoidable. So these are something that we have to understand. So you can also look at international rupiah. Every time international rupiah weaken against US dollars, after a period of time, you realize that things are getting a little bit expensive, especially on the imported products from US itself. Okay, the branded goods became very expensive in Indonesia. So this is something that you can relate. All of us can relate to that. So of course, with high inflation, there will be higher interest rate. High inflation, it means that gold will also be going up. When US dollars weaken, it also means that gold will be trending up as well. So all direction, whether it's a technical analysis or fundamental development, it speaks to me that likely gold is trending up more than before. Okay, but not to with such aspects, I would say that in future there'll be greater volatility to come. That's definitely, but it may not be a bad thing though, because we are into this topic, right? Whenever there's uncertainty, now what I do is that when I invest in the US market, now notice what I said here is that when I invest in the US stock market, because of understanding this fundamental, I will keep it very light, just for investment. So my US stock portfolio is just for trading, but it's not for long-term investment. There's an investment in US, I apologize. I'm referring that I only trade the US stock market. Why? Because US stock market is very uncertain. I do not mind to trade them, but later I share with you how to trade the US index futures as well. I will participate in a lot about trading activity in US stock, but not so much of invest and hold the US stock into indefinitely, just like how I do gold. This different play, okay? But whenever there's greater volatility, I think gold is good news. But this also means that whenever there's greater volatility, there is also more trading opportunity in the US stock indices itself, in the US stocks, in the global stocks, more trading opportunities. Okay, now, this is what I'm going to do here. Now, let's discuss about the trading strategy for gold right now. Okay. Now, so this is the micro E-mini contract for gold. And in the recent years, they developed this micro E-mini gold and silver. It's very wonderful. Later, I'll share with you how it works. Like what I say, as things get a bit more pricier, assets became more expensive, but they break down into bite size. So as retailer can also participate in gold and silver. Now, in the past, I still remember when I first entered the financial market, that was in year 1995. To trade gold and silver is for the big boys. If you do not have $500,000, I'm referring to Sing dollars or US dollars or 1 million US dollars or Sing dollars, the bankers will not entertain you to trade gold or currency. But today, it is different. All the layman retailer can participate in any product, provided you put in some effort to learn about it, to understand the fundamental and technical. Okay, let me just explain to you how this micro gold works. Now, it moves by every 10 cents. Every 10 cents represent $1 US. Now, if I got to shift the equation to, since every 10 cents is $1 US, how about 1? What does it mean? 1 is also equal to 10. It's mathematics. Okay. Now, say for example, now the goal is at 1850. It's about that. Okay. 1,850. Now, if I bought into 1 micro E-mini gold, what does it mean? It means that since 1 point is worth $10, if I buy at 1,850 right now, I take 10 times 1850 is equate to 18,500 US dollars. Notional value. When I say notional value, it means that you're actually buying the actual worth of the gold worth 18,500 US dollars. Now, it also means this. In the event that my view is wrong, gold collapse all the way down to 0, which I think is highly unlikely based on our understanding here, but I just want to give you a perspective here is that if you bought gold at 1850, means that you're buying actually a basket of gold worth 18,500 US dollars actual value, that in the event that gold collapsed to 0, worthless, what is your maximum loss? Your maximum loss is 18,500 US dollars. Of course, if you have a strong conviction for gold, you don't have to buy 1 micro E-mini gold. You can buy 5 or 10, right? So I just want to give you an understanding. So similarly, I'm going to go a bit fast in the micro E-mini silver. Is every 1 point worth 1,000 US dollars? And today's silver is about 27. So you just take 27 times 1,000 is worth 27 US dollars. So later on, I'm going to explain to you how the silver works as well. You see that all the market, what I share with you tonight, the trading strategy about first identify the trend, recognizing where's the reversal. Then after that, identify the trend. When you have a strong conviction where the trend is on a bull market, you start to look for retracement. Okay, when retracement comes, you try to look for hammer or bullish engulfing body, hammer or it's not hammer, or bullish engulfing candlestick, or all sorts of combination. Okay. Now, let me just do a recap here. First, we have to identify the trend. Trend is our friend. It's very important. I think we heard about this phrase before. From a reversal, if you go do your best to study where's the trend right now. If you believe that the current trend is on an uptrend, you try to look for retracement. And you look for hammer, and not just ordinary hammer, but those hammer that has high in weighting. If you miss this, doesn't matter. Just let the market run. Then retracement should always come. As it comes, you got to be very patient, wait for retracement to come, and wait for a hammer to appear. Now, I have no time to explain to you what's the psychological of a hammer that have high in weighting, but later on, I'm going to refer you to a program which I've done with CME and also Phillip Futures in Singapore. So it's recorded. So if you want, you can visit that 1 hour webinar where we identify which are the hammer that has high in weighting. Okay, so this how I do it. Very simple. And later on, I'm also going to share with you how to manage stop loss as well. Is it possible for me to do that? I have the next 15 minutes. I think I can do it. Okay, so okay, so how to identify market reversal using identify those hammer with higher in weighting in the US indices. So that was the webinar I've done with Phillip Futures in Singapore. You can do the QR code scan. You can take a picture. You can study it tonight. If you still have the energy, just go ahead. Or if not, then this weekend you can spend some time. Okay, but not to worry, I will show these slides again at the end during the Q&A. Okay, let me just move on. About the market outlook for precious metal. What's the market outlook for precious metal? Okay, now, so these are retracement. That's what we study. On my super long-term view, I believe that in the cross of 2015 and 2016, retracement have met, and moving forward, we're in the bull market. Okay, now if this is a 40 or 50 years old uptrend for the precious metal market, okay, now as I study across market, especially for the US market, there's this 50 years or 40 years cycle. In fact, the US stock market started to rally in 1980, and today is 2020. That was 40 years have passed, right? So no, US stock market have not rallied in the start of 1910 or 1900. It only started its rally in 1980. if you can get hold of a super long-term chart of the US stock market, please do so. And you could see that every cycle is about 40 years. So same thing for precious metal market. If this is a 40 years old chart, based on today value, where would I put a dot to represent where is the precious metal market today, with the understanding of the technical analysis that I've just gone through with you, and also fundamental development that we have discussed together earlier. Now, I would say that I'll place here. Now, bear in mind this bull, it can be extended. So, right. And I believe that that was in 2015 and 16. Remember the 2015 and 16, that was the retracement. And then we have markets start to have some jagged. And today we're here. Okay, let me just bring you back. Okay, now once retracement is done, super long-term view, I find that reversal is here in year 2000. And my super long-term view is that these are retracement. And once retracement is set, bull comes in. When bull comes in, you have to understand the market don't move one straight line. It's not linear, it's jagged. But the jagged there's some character in it. For every bull market, the character is this. The low is a higher low. Each low is a higher low. So when the market, on the bull market, it starts to move down, do not be fearful. If you understand about how technical analysis work, if you understand about the fundamental development as well for the gold market, as it come down for the gold market, to me, is an opportunity for me at this point in time to acquire more gold. And maybe for you have not started in gold yet, is for you to get into the gold market also when it start to come down. Okay, so can you see that once the retracement is done, the bull set in, so you move up. That means the bull market, the characteristic is that when the trend set, the retracement, the low is always a higher low. Now look at this low, it's a higher low from the previous low, higher low from the previous low. So always look for all these market to come once the bull set in. Okay, I keep on repeating because repetitive information is important, that will help us to sink in what we understand. Okay, so now over the past few months, during the COVID-19, the gold market also have not been getting too interesting, but lately it has been getting some interest there. Okay, so at the point when I prepared this on 14th of May 2021, gold was at 1826, and today gold is at 1874. So yeah, so yeah, anyway, I'm just quite delighted. Yeah. Now I have this Telegram chat. You can get involved in Telegram chat also. I post a weekly case study. Okay, a weekly case study to this Telegram chat group. Now, so same thing for the US stock market as well. Okay, my idea for US stock market is this: you can participate in the CME Micro US Index, which I check with your broker. Now, my idea stock. Let me say that for US market condition, I'm not too keen to be an investor to invest in their stock and hold it forever, but I'm more interested because of the volatility of the US stock. I'm more interested to trade them. Now, how should I trade them? I'll trade into its derivative, which is the micro E-mini US index. Now, same thing. My idea for US stock is this, or index is this. As long as I need to develop a feel and understanding of where is the main trend. And to me, the main trend is very straightforward. Now, listen to this very carefully on the fundamental development is this. As long as the US has the ability to get the bill passed by the Congress, to continue to have stimulus package every cycle, that means to print money and to spend more, print money and spend more to help the people, the business, I think the US stock market should be going up, still be trending up. So as you have that means the whole fundamental is this: you have to understand that as long as the US still have the ability to get the Congress pass the bill and to print money and to have stimulus package, the stock market should be still going up. Means that it's still on the bull market. So therefore, you wait for every dip and look for hammer to get into the market. Now, this is just one example I'm going to share with you. And this is a study on the 60 minutes chart. Now, then I say to my community here is that I say that the US market was still moving south. March, it was coming down. I posted this on the 6th of March. I say that I analyzed that the main trend is still up, where I explained earlier. Therefore, I view that the market as a retracement and looking out to buy on dip with a measured risk. So later I go into this hammer. Now, I say that the following case study demonstrating the biting point on the buy on dips. Now, this case study will be suited for those short-term trader as I study into the 60 minutes chart very recently. Now, let me just go into March. Now, remember, my whole idea objective, including today, that again, as long as the US can continue to roll out stimulus package, I think the US stock market should be still trending up. So do not let the short-term few weeks or 1 or 2 months down move be fearful. Always look for the dip to get into the market, but please also do not hold on to your losses. Okay, I'm referring to those who has not have any position yet. When the market take a dip for a few days, for a few weeks, now you know that the main trend is up. What you should be looking out for is something like this, the bullish engulfing body, not just ordinary one, but those that has high in weighting. So please go and view that free video, and you will understand how to identify those hammer. This is a hammer with high in weighting. Then you will know exactly the biting point, when to get in with a measured risk. So later on, I'm going to explain to you how to do stop loss as well. Then I'm expecting the market to trend. Now, after that, you could see that there was a bullish engulfing body very clearly, and there was a hammer as well. Then after that, the market trend, and that was on the 6th of March. And this chart I captured on the 30th of March. Then after that, the market reached about 33,000, and the market didn't end there. The market continued to run to 5th of May, 35,000, until the recent days. Just a few days ago, the market took a dip. There's many reasons why I took a dip, but I felt a bit uncomfortable. But along the way, I cleared some position. But the last few days, the dip, I feel a bit uncomfortable. I clear most of it at about 34,000. No, I didn't clear at 35,000. Now, you have to understand that you don't have to buy at the low, neither you can buy, sell at the top. There's no way that you can do it. But you have to understand in market psychology is this. When the low has been created, you have to understand this. Likely, we can tell. So similarly, when the high has been established, we can never sell the high because we do not know where the high will be. But the psychology is this. When the high is being established, you should be able to tell. So I clear most of my position, whatever I purchased on the 6th of March. Yeah. So now it's time to move into the gold. Now let's look at the silver market. Okay. Now let's look at the silver market right now. We talk so much about the gold market, about some of the US market, but let's look at the silver market right now. Now, silver market is a laggard. I got a bit frustrated with the silver market because when I started to get serious in gold about 4 years ago, I also looked at silver at some position, but it was slow. Okay, so it's a laggard. Laggard means that gold pick up first, silver pick up later. Now, these are the biting point. Where was the biting point? Not to stress you, is that could you see that there's a bullish engulfing body? Yeah, there's a bullish engulfing body. Now, in the another video I'm going to introduce to you, I will share with you how to identify all these bullish engulfing body and also the combination of different hammers. Okay, now you can see that there was a bullish engulfing body. It's not a classic bullish engulfing body. I know that, but it is a bullish engulfing body. When the trend starts to pick up, the bull is set. Now notice that as it trend down, we notice that another bullish engulfing body, and the market pick up again. So every time it come down, another hammer appear, then it pick up again. So I think it's going to range bound for a while before it start to punch up again. So this is my view for silver. So it's the same thing. It's just that silver is a bit lagging, but my trading techniques will be the same. Now, just do a recap here. First, you have to identify where the bear market is done. Then reversal is set in. Reversal that the bull trend has set in. Now, once the bull trend has set in, what we need to look out for as a trader or even an investor is that we look for dip. We look for retracement to come and we buy into the retracement. Of course, then we look for all this biting point. This is what I call the biting point. You know exactly when to bite the market. Okay. No, you're not the fish. You're the fisherman.
Okay. First question. Regarding the hype of the Bitcoin this day, does it will affect gold as a safe haven asset?
Sorry, Nanda, can you repeat the question again?
Okay, regarding the hype of the Bitcoin this day, does it will affect gold as a safe haven asset?
You're saying that with the COVID, right? COVID-19, right? Does it affect the market?
No, the hype of the Bitcoin, the hype of the cryptocurrency.
Oh, yes. Okay. The high of the Bitcoin, will that affect which market? The gold market?
Yeah, the gold market as a safe haven asset.
Yeah, very good question here.
Yeah.
Now, first of all, I have to let you understand what is a Bitcoin. What's a Bitcoin? Okay, so 2 days ago, I met a very interesting guy. He is a Bitcoin consultant in Singapore, and he's not. He's very proper, because whenever someone says a Bitcoin expert, are you usually a bit cautious? Are you real, or are you a marketing guy or whatever? But he's a consultant. He's very proper. So I got very excited because I always want to know much more about Bitcoin. Then I asked him one question about Bitcoin. I say that, can you tell me, like for example, like gold, we can calculate the intrinsic value. You say, wow, gold can calculate intrinsic value. There's many layers to calculate gold is intrinsic value. Now, first is the production cost of gold. In order to produce 1 ounce of gold, you need, the cost is to extract that is about $1,200 about that. And that's already there's a bottom line to it. If you do not pay $1,200, no one will want to mine and clean up the gold for you. So there's already a bottom, a line. There's already a benchmark, a line. And not forgetting that is benchmarked towards the US dollar. So gold, you can kind of calculate the intrinsic value, not accurately, but you get a sense of where the intrinsic value is. Now, let me just go back to Bitcoin. Now, then I asked this gentleman, the expert or consultant, I asked him, his name is Bernard. I said, Bernard, can you tell me, can I calculate the intrinsic value of Bitcoin? And Bernard said, no, there's no way you can calculate the intrinsic value of Bitcoin. That's it. So I understand. Now, if you cannot calculate the intrinsic value of Bitcoin, it means this. The hype up in Bitcoin, yes, there's a reason to hype up because of the future infrastructure, about the future infrastructure, the future hope about the Bitcoin, the cryptocurrency. So people speculate in it, right? But as long as you cannot calculate the intrinsic value of the Bitcoin, it means that this product, it is not meant for investment. But the thing is this, there's a lot of trading opportunity in Bitcoin. Now, if you say that with Bitcoin hype, will that affect the gold? My answer is yes. It will bring, whenever the Bitcoin became volatile like this, the gold started to appreciate. People became to, because what happened here is that the marketplace got a bit of misunderstanding. They invest in Bitcoin, and a lot of them lost a lot of money. But they fail to understand that Bitcoin are not for investment, are meant for trading. Now, if you trade, that means something without intrinsic value, but is very volatile and liquid as well. It is good for trading, but it is not for investment. Trading means that if you feel that the market start to drop and you're going to move downwards, you got to cash out fast. Now, your question is that how will that affect the gold? I think will bring the recent volatility and the crash of the Bitcoin. It's just going to bring more stability to gold. Now, as you could see that I prepared the slide on the 14th of May, right? That was at 1824, and gold has been gradually going up while Bitcoin hammered down. So people will start to recognize, especially the investor, they will still want to find a safe haven. After they realize the hype out of Bitcoin, I think gold and silver and other precious metal market is a better safe haven. Okay, so with that, I just want to conclude that. And I also want to share something with you here on the Bitcoin, right? And CME launched a Bitcoin, which I'm quite happy about it. So, and recently they just launched. When was that? Okay, that was on the, let me see here. This is May the 3rd. Yeah, so the volume have picked up as well. Now, Bitcoin is something that I always love to trade, but I just couldn't find an platform to trade because either certain platform, the spread is very wide. But I'm so welcome that CME launched this micro Bitcoin. So basically, you can capture this page, 1.15 US. And even a Bitcoin, I prepared this was few days ago, it was 50,000, but today it's about 36,000. The value was, the standard contract is 250,000, but today the value, if it's 50,000, is that means the full notional value is just $5,000. So this is something that I want to share since you asked me about Bitcoin. And also, about Bitcoin, do I have Bitcoin here? No, I don't have Bitcoin here, but I have a view about Bitcoin based on what I've shared, this trading strategy I've shared earlier. But on this slide, unfortunately, I didn't prepare the Bitcoin. Okay, never mind. Can we have the next question?
Okay, Mr. Konhao. You mentioned about the US indices, yeah, at the beginning of the webinar. So the next question is how the economy recovery going now in US and how it affect US indices.
Okay. Then we shall look at the chart for the US market. And let's look at specifically, maybe, this is a US stocks. I hope you can see the chart, what I have here. Okay. Now, so if you ask me about the US market, now, earlier I said that I got into my position on the 6th of March. That's about here. Okay. Now, I still remember what I say about the US stock market here is this. I can share with you my view, my outlook for short-term trades for the US market. It is this. Now, on the 6th of March, I got in here. On the daily chart, you could see that there's an engulfing body. Okay. Then it's quite sharp. It's a biting point. I get in with a measured risk about here and I expect a run to come. Okay. Now, when the run comes, there was an inverted hammer here, but the selling wasn't that strong. So I continued to hold on to it. Now, remember what I said earlier, that as long as the Congress able to continue to issue stimulus, the market should be fine. Stimulus, it is good. But fundamentally, it weakened the whole structure of the US dollars. That's why there's this inflation fear. So that's a real threat as well for investor in the US stock. Now, but for traders, tonight, my topic is about traders, right? Now, as the trend set, now US stock market or indices has been set on the longest trend. Now, so you could see that when the market is bull, you could see that market buy on dip, we have bullish engulfing body. You buy on dip, the next dip is that, can you see that there was a hammer and market push up? Now, when I got into the 6th of March position, along the way, I've cleared some, but the one that made me feel a bit uncomfortable, it was this move. Okay, now about this move. I just want to share with you some trading strategy. Then later I'll answer your question here. Now, when I saw this inverted hammer, so this was a reversal signal, but I keep watch. And the market for the next 2 days, it dropped greatly. Compared to all these, it dropped very deep. Now, when it dropped very deep, I don't like it. I don't like this trend anymore, because when the market starts to shake, it means that it may shake further on the downside. So when I see the inverted hammer, the market start to give me a confirmation like this, I hope that there was a pull up. Now, when the pull up comes about 34,000, this is where I try to clear most of my position on the 6th of March that I established. Now, if you ask me moving forward about the US stock market, the indices, the CME micro indices, my view is this. I'm not too sure at this point in time. I believe that the market is going to range bound. And I believe that based on this move, the market may dip further. But as it dips further, I will look for a biting point to get in later. So that's my view. Why am I still bullish on the US market? Very simple. Earlier I said fundamentally, as long as the Congress agreed to issue new bills, the new bills is coming up is the infrastructure bills. That's worth about 2.6 to 3 trillion US dollars. And that's another big package for the whole US economy. And likely the market will pick up again. So I'll wait for the market to correct, to trade. Trading and investment is different. Wait for it to correct. And overall, it's still a retracement. Let's say, for example, the next few days, the market starts to dip, and finally it demonstrates a hammer that have strong weighting, then this is the point that I will get in again. So if you ask me where to trade the US market, I will still be in the same motion to look out for buy on dips signal. Okay, so I'm quite thorough. So if you ask me one question, I will give you a whole suite of strategies. This is just me.
Okay.
Yeah.
Okay, the next question, maybe it is for me. How to trade US indices in Phillip Futures? Which one should I choose? Oke, pertanyaannya akan saya jawab. Betul, memang kita di Phillip Futures itu bisa bertransaksi US Index ya, US Index khususnya seperti yang tadi mungkin Mr. Konhao sudah sempat mention, yaitu adalah Micro US Index. Micro US Index. Di sana ada Dow Jones, kemudian Nasdaq, Russell 2000, kemudian juga S&P 500. Nah, di sana nanti bapak-bapak dan ibu-ibu dapat mulai bertransaksi. Bagaimana caranya? Dimulai dengan opening account, kemudian penyetoran dana, kemudian itu bisa langsung mulai bertransaksi di indeks-indeks US. Untuk di mana baiknya memilih indeksnya, mungkin akan lebih dalam lagi akan kita bahas di webinar kita selanjutnya di tanggal 27 nanti. Okay, the next question for Mr. Konhao.
Yep.
Okay. How US inflation affect the market? Do you think this is the right time to start trading US index?
Yes, definitely. Okay, I think there's two questions here. How does inflation affect the market? Now, inflation is bad for the stock market, first of all. Now, but before that, do you think that inflation will come? I think everything is pointing to that notion that inflation should pick up. Because of what? Because the US dollars is weakening, not by the years, but it's really weakening by the days. So it's really weakening by the days. And when you look at the weakening by the days, earlier I mentioned that when US dollars weaken, inflation will come. Okay. Now, when inflation comes, the next question is that how will that affect the US market? It will affect, because when inflation comes, it depends. Okay. Now, when inflation comes, if the government, the Congress, or the Fed can kind of control the inflation to not let it continue to rise, and that's a good news. Market will bring some stability. But if not, say for example, because these are market forces, no one can control it. If the US dollars continue to drop and inflation is not able to tame greatly, inflation keep on moving up, and that will create a lot of stress to the Fed. And now Fed, what we're trying to see, what they're trying to do is that they're trying to control that, to not make the statement that inflation is there, so that they are cornered to hike the interest rate. We all could see that. They try to avoid the word hike interest rate. Then, but it also depends on the inflation. If inflation is not able to tame down, it's keep on picking up, you will come to a point that Fed will have no choice but to hike the interest rate. Now, hike the interest rate is no good for a very weak economy. Okay, a very weak economy. Although it's at a high, but it's a very weak economy. Whenever a high interest rate, you have to understand this. Most of the listed companies, or the non-listed companies, even in Singapore and in Indonesia, most of the companies, they borrow money from the bank for their expansion. To borrow money from the bank to buy equipments. Now, when interest rate pick up, it means that every month they have to pay more to the government or to the banks. And that will create a lot of stress to that listed company. So when interest rate pick up, is definitely not good news for the US stock market. Okay, so that's one question, right? Then your second question is that, then how to trade the US market? Now, exactly, you should trade the US stock indices is this. It's not just going up. Just now I shared the strategy very dearly to you, how to examine the US stock market. The earlier example was on the micro mini down futures. When to wait for it, what to look out for it to trade on the upside. But similarly, if you find that the uptrend, remember, think opposite. When the uptrend starts to reverse, okay, reversal come, and the bear trend set in, then whatever I speak to you earlier, you just think opposite. When, that means the bear trend set in, the trend now is bear trend. When the bear trend set in, what you should do using all this US indices market is that you wait for retracement on the upside now, retracement to sell short, retracement to sell short. And this is how you can participate in the US stock indices. Both ways. That's why I say at the beginning that in the current environment at this time and age, we're quite blessed compared to 25 years back, where all these indices, Forex, are meant for the big boys. But even today as a retailer, I'm advocating. That's why my job is to educate, to advocate that you do your part to study into it, call your broker to understand about the product, then you do your part to study about technical and understand about fundamental, and you try to form an opinion. So with that, I think I want to thank you, Nathan, Nanda for staying true, and also Chilia for facilitating the whole event. Yep.
Okay. Thank you, Mr. Konhao, for present the material for the webinar tonight. Terima kasih Bapak-Bapak dan Ibu-Ibu yang sudah mengikuti webinar pada hari ini, malam hari ini. Dan kami mengundang Bapak dan Ibu untuk mengikuti webinar kami selanjutnya yang merupakan kelanjutan dari webinar Mr. Konhao pada tanggal 27 Mei 2021 ini. Dan masih akan membahas tentang gold, outlook, perhitungan profit, kemudian juga mengenai produk-produk gold yang bisa kami tawarkan dari Phillip Futures. Baik, sudah tidak ada pertanyaan lagi. Dengan demikian dapat kami tutup dan kami selesaikan webinar pada malam hari ini. Thank you for Mr. Wong Konhao for the webinar tonight.
Yep. So once again, I want to thank you for all tuning in, and thank you for staying through the last 1.5 hours and your active participation. Do take a look at the gold market. No, it's not just for investment. There's also a lot of trading opportunity. It's not just gold, it's the precious metal market as well. So with that, have a good weekend, and thank you so much. Hope to see you around.
Thank you, Mr. Konhao. See you later.